What's happening, everybody? It's Hip Hop Hotel Broker. Hopefully, you all had a phenomenal weekend, and your week is going to be really great. Why? Because I'm going to tell you about some of those hotel auctions that we have going on. Obviously, the Extended Stay America. So tap in with me if you have questions about that Norcross property right outside of Atlanta, or the two-pack right there in Annapolis. So really good opportunities out there for you all looking, again, economy, extended stay assets, opportunities to rebrand, may even be able to get some key money with a new brand. So happy to walk you through all those things. Tap in with me if you need any assistance. So today is the day of the big game. So fun fact about me, I know nothing about sports, but I do understand the economic impact that it has. So fun fact about Phoenix as it relates to the Super Bowl, apparently it's the fourth time that the city has hosted the event, which is a pretty big deal as I understand. Now, they're expecting about 150,000 visitors. So what does that mean? And this is why I love hotels over multifamily, is because you're able to take advantage of these big one-time events like a Super Bowl or something like that. If you have tenants and you're at 100% occupancy, you can't say, hey, Super Bowl or Beyonce is in town, so I'm going to jack your rent up. And you really can't do that. It's just a base. I understand you do have downside protection there as well. But keep in mind, the great thing about revenue management is you're able to put in stay minimums, 2-night stay minimums, 3-night stay minimums. So all of those things. So right now, I'm going to read off some of these stats here. So it's forecasted for this week throughout the Phoenix market, which, by the way, only consists of about 544 hotels and just shy of 71,000 rooms. The RevPAR is projected to be $419. That's the RevPAR, not the average daily rate, the RevPAR. And that's with a significant increase in supply coming in, double-digit percentage of supply coming in over the past, couple of years. That is major. $419 in RevPAR. So people are about to have really, really, really good quarters and ultimately a really good year. What does this also mean? If you're looking to buy a hotel in the Phoenix area, you need to learn how to extract this data. So a lot of people will put their hotel on the market maybe in 2024. And it's like, oh, well, we just kept going up. We just kept going up. And then we really turned the corner in 2022. And it's just like, yeah, you had a one-time event in town where $500,000 fell through your door over 5 days. That's not really sustainable. That's not a thing that we can count on happening every year. And I've seen that happen multiple times where hotels have had one-time events. So that's something really crucial that experts can help you identify when you go to look at a hotel for sale. So the other thing to note is that it's going to be about $719 million in economic activity, and you got hotels like a Holiday Inn that are able to get $900 a night. So typically not really within the realm of feasibility for a Holiday Inn, but again, supply and demand, and they're able to go ahead and capture that this weekend. So just kind of overall throughout the industry, for the 29th to the 4th, Star reported their feedback in terms of hotel performance. So we're talking about occupancy of 55.3%, ADR 145%, and RevPAR a little bit over $80. So RevPAR is up over 2019, same week. That's really good, healthy. We're seeing this growth. We're seeing this continued story that says that hotels are recovering. So, and then like we always projected, and a lot of analysts projected that hotels will be fully recovered. So I'm gonna jump into the next story, which is that Smith Travel Report said that U.S. hotel revenues and profits and labor costs reach record highs. So understand that revenue, profit, and labor costs. So why is labor something that we're all keeping our eye on? The labor market has shifted and it's just grown significantly in terms of cost to attract and retain labor. Now, here's where it gets even more interesting. So labor costs grow at a compounded monthly rate of 3.7%. All right, so where you're seeing the largest gap in terms of revenue for 2019 is in food and beverage. And why? Because a lot of that is driven by banquet and that type of meeting demand. Why? Because corporate is down. Corporate is still not returned to what it was at 2019 levels. Again, that is in general. There are some markets where it's back and it's stronger, or it's gotten stronger than it's ever been. So that's all stuff for you to keep in mind, right? But we're talking about $80 for the week in terms of RevPAR. That's healthy activity. Now, the other thing to note is you start talking about supply. And what's happened as of late is that hotel brands, how they've decided they're going to grow. There was a really good article that came out that's saying that hotel brands want to grow through conversions. There's another good article that came out as well, and that's specifically talking about Hilton with their 19th brand announced being Spark, which is conversion brand. If you're 3-story interior corridor, you're in the right location. That's something where you could potentially do where some of these boxes weren't really, capable of going into the Hilton family. Now, here's where it gets really fun to think about too. They're saying, really good article came out saying how hotel renovations are going to be the path for a lot of investors. Why? Because they basically said, if you rebuild it, they will come. And I love that. That was a great quote from the article. So basically saying that you can buy these assets, renovate them, and like everybody, you have to factor in what we look at a gut check. And one of our KPIs is, hey, is it cheaper for me to build? And again, construction costs, renovation. So everybody out there that's out here signing new development deals, that's out here, everybody comes to me, oh, I got this plot of land, I want to do development. It's very long in the tooth. The experts are looking more and more, not looking more and more, they've always been doing, but they're talking more openly about the acquisition and renovation and or repositioning. So that's something to keep in mind. And then when you look at that, what that also means is acquiring something and repositioning into something that has a lower labor model. So making sure that it's running as efficiently as possible. If labor continues to grow, it's just, the hotels are a very labor sensitive products. After you get above a certain key count, you kind of have to have X amount of people. You really can't just, have a bunch of tech and everything kind of run itself yet. That gets a little bit more challenging on larger boxes. So what does that mean is that you have to make sure that you have efficiently staffed the property. So do you necessarily want to own a product that gives away free breakfast, right? You can argue and say, it's pennies on a cost per occupied room. But again, that labor and like all that stuff adds up. Do you want to have something where you have to have a bellman and a doorman, being in one of those downtown markets where you end up having to have a lot more support amenities versus, if you're in a suburban secondary market where that may be of less necessity. So keep that in mind as well. It's the Hip Hop Hotel Broker. Hopefully y'all have a great week. Again, reach out to me for questions on any of these auctions. Reach out to me should you need consulting on your acquisitions. Looking forward to working with you all. Have a phenomenal week. Knock it out. Peace.